Hello, traders. FX Pip Collector here. Today is Wednesday, January 15th, and today we're going to be looking at the US dollar pairs, including gold, and we're going to take a look at a couple of the JPY pairs. If you haven't done so already, definitely check out my free Discord trading community. It is 100% free to join. I have 5,700 plus members in the community, so definitely check that out. It's a large community and it's 100% free to join. If you would like to join my membership to get access to all the benefits listed down here below, then you do that by joining at my website, fxpipcollector.com. It is only $30 a month and it gets you a lot of benefits for a very, very cheap price. So, anyways, I like to start off by looking at the news for the day. You definitely, each and every morning, you definitely need to be aware of the major news events that are going to come out in the day. And today is definitely a pretty big day. We got US dollar CPI news this afternoon, 1:30 UK time or 8:30 Eastern Standard Time, New York time. And this is normally a really big mover for the market, so I would definitely expect to see some pretty good volatility. We also have this New York manufacturing index, definitely not that big of a deal. And maybe if you're an oil trader, you might want to pay attention to the oil inventories, but not really a big deal for Forex. So make sure you're paying attention to your charts, especially if you're in some dollar trades around the CPI inflation data, which as of now, they're expecting that inflation will go up a little bit. So we'll see how accurate that really is or not. So let's start off by looking at the US dollar index. For me, it's always one of the most important things to look at when I'm analyzing the dollar pairs. We are at the 78% Fibonacci retracement. We do have a little bit of a reaction to that area. That normally is a big area of resistance or support, depending on whether you're in an uptrend or a downtrend. But I'm really not convinced that this trend is over yet. I kind of have a feeling we're going to end up doing something like this over here, potentially spending maybe a few weeks in a corrective action, probably like a wave three, a wave four, and then eventually a wave five, giving us the break of structure and the back big downtrend that we've been waiting for. So I personally think there's a good chance that we are a few weeks away from the big turn that we are actually waiting for based on my time cycles. So, anyways, I got my Fibonacci retracement on the last push up right here. You know, if it goes down and breaks this low, then the dollar uptrend is probably over. If it goes down and makes any sign of a corrective, ABC pattern down to a Fibonacci level or anything like that, gives us an impulsive move up, then I definitely will be taking it as a long for hopefully the continuation of the bigger, higher time frame uptrend. So let's start off with the euro dollar as usual. Now, the euro dollar definitely did make a pretty impulsive move up yesterday, a really nice little turn. Definitely no break of structure on the higher roadmap daily time frame, which means that the trend is down on the daily, the trend is down on the weekly, the trend is down on the monthly. So what does that mean? That means that the momentum is definitely still down. Now, I would kind of like to see this go up, and I kind of feel like based on correlated pairs that it might go up and make a wave four, and then in a couple weeks from now go down and make a wave five, and this would be like a wave three, a wave four, and a wave five. So we're gonna have to watch and see if that's how it actually plays out or not. Going down to the 1 hour time frame, this move up is definitely looking pretty impulsive, as you can see. The euro has a lot to do with this. I mean, the euro is pretty strong right now for some reason. We have our Fibonacci retracement from this whole move down right here, and we are watching our Fibonacci retracement levels very closely. I think there's a good chance that CPI news will cause a push down today because there's a very high percent of retail traders that are long on the dollar pairs. And normally, when there's a high percentage of traders long on any given pair, especially at a big news event like the CPI, the market will do a liquidity grab and then it will potentially end up going back up. So I'm kind of hoping that what happens today is it goes down, maybe does a liquidity grab, maybe a stop hunt, and then kind of messes around a little bit, and then hopefully it goes up, and this ends up being like a wave one, a wave two, a wave three, and then eventually a wave four, and a wave five of a wave A, which I think is a wave A of wave four, especially looking at that US dollar, which just explained. I think the US dollar is likely going to make a wave four over the next couple of weeks. So I would expect the euro dollar, just like the US dollar, to make a wave four also. Moving on to the pound dollar, let's go back up to the daily time frame. The pound made a very strong move to the downside, mostly because of the pound, not just because of the dollar, the pound weakness. We are kind of turning up a little bit. We did turn up right at the 178% Fibonacci extension of this, projected off of that. So we definitely do have a reaction right there, but we have no break of structure. Just like the euro dollar, the daily is in a downtrend. The monthly and the weekly are in downtrends. When all your higher time frames are in a downtrend, what is likely to happen? It's likely to make another lower high and keep going down. The trend is, as always, your friend, even when you have big news events like the CPI. Now, going down to the 1 hour time frame, I've been saying this for the last couple of days, but this move up that we're currently getting could very, very likely be a correction to this move down. We could easily get 1, 2, 3 waves up to any one of these Fibonacci levels, and we could potentially get another impulsive move down. Now, with the fact that retail is so long, like I said, on these dollar pairs, and we have a big news event today, I wouldn't be surprised if it did go down, maybe even grab these lows, do a nice little stop hunt, and then end up turning back up. But it definitely does not have to go up and take out these highs. We are in a downtrend on every single time frame. What's that tell me? That tells me that it may just continue the downtrend on the higher time frames. This does not really even have to make a big move up. It could literally just do another 200 pips to the downside very easily. So be very cautious with your longs. Until we see some momentum start turning to the upside on the higher time frames, you definitely want to be a little bit cautious on your longs that you take on the dollar pairs. Moving on to the Aussie dollar, back up to the daily time frame. All the dollar pairs are pretty much the same thing, which is why I always start off looking at the US dollar index and then I apply that information to all the dollar pairs. I actually think of out of all the dollar pairs, the Aussie dollar I think is one of the clearest ones for me, that this is a wave one, a wave two, and then we have a wave five of three. So a wave three is potentially over, and that this is potentially going to go up and make an ABC of four over the next several weeks, and then go down eventually for wave five before we get the big reversal that we have been waiting for, which I think, based on my time cycles, time forecast, is most likely still several weeks away before we get the big turn that we're waiting for. So keep that in mind. Let's take it down to the 1 hour. Now, with such a big news event coming out today, it's kind of a roll of a dice of what exactly is going to happen at the news. With the fact that so many retail traders, the trading sentiment is very long on the dollar pairs, I think there's probably a good chance that it will go down and stop everybody out. But I think there's also a good chance that it might make a move up. Now, it does not have to go up and break structure just like the other dollar pairs. It can make three waves up to a fib level and just continue the bigger downtrend at any point. So if you do go long, be very cautious. I think your main focus, as of always, still needs to be trading with the trend and looking for shorts at the end of three-way pullbacks, especially. This move up right here to me looks pretty much like a wave B, and it looks like a wave A. Kind of looks like it's going to go down to a stop hunt for a wave C, probably get retail stopped out before it makes another push up. And the next push up should be either a 3 or a C. Hopefully you can learn and earn at the same time whether it's really a wave 3 or whether it really is a wave C. So the Kiwi dollar I don't really look at because it's literally exactly the same analysis as the Aussie dollar. Just one is usually a little weaker than the other. So let's look at the US dollar CAD. US dollar CAD also has kind of that shape of, the topping out shape, like it potentially needs to make a bigger pullback. Based on the US dollar index, I think we need to make a wave four. So I think there's a good chance it will go down. And potentially there's like a wave three over here. This would be like a wave four. And eventually it would go back up and make a wave five to complete the higher, like weekly, monthly time frame cycle or pattern. So overall, I still kind of think there's a good chance that we're going to get a bigger move down, probably to make a wave four over the next several weeks. Taking it right down to the 1 hour time frame, even though that's kind of what I expect to happen, I do need to be very cautious because we have a Fibonacci retracement on here. The reason why I say we need to be very cautious is because the monthly is in an uptrend, the weekly is in an uptrend, the daily is in an uptrend. Every single one of our higher roadmap time frames is in an uptrend. What does that mean? That means that we can literally get a Fibonacci bounce off any one of these levels, a break of structure, and it could continue the uptrend. So even though I feel like there's a good chance that we need to make a bigger pullback on the higher time frames, like a big wave four, like I was showing on the daily, we need to be careful about assuming that it's going to go down because the momentum is up on every single one of the higher time frames. So if you do see a break of structure, you do see a bounce at a Fibonacci level, then you definitely want to try to get long because the trend is your friend as always. Moving on to the US dollar Swiss, pretty much the same story as the US dollar CAD. I mean, the last structure level is way down here, so unless we break this structure or we make a very significant lower high, I really would be very, very cautious about going short. This move down right here may just end up being another correction based on the US dollar index, probably another wave 4 and then potentially up for a wave 5. I see that we already have 5 waves up on this pair, but the fifth wave is stretched out to the point where I feel like it needs to make that 3, 4, 5 shape, which in this case will probably be like a wave 6 and then eventually a wave 7. The market does not have to stop at the 5 waves. I've seen 7 wave trends, 9 wave trends, 11 wave trends, and beyond. Going down to the 1 hour time frame, we got our Fibonacci retracement on the last impulsive move up. We are watching this move down, which so far this move down looks more like a trend than a correction. So I wouldn't expect this to just turn right up like that and continue up. With today's CPI news, I bet it is going to turn up, but I bet overall it's going to go down again to complete probably a wave 4 on the higher time frames. And if it does break below structure with momentum, I'll be more than happy to start looking for shorts after the break of structure and after the pullback that comes after the break of structure. But for now, I am paying very, very close attention to my fib levels. I'm looking for 3 wave ABC, looking pullbacks and nice Fibonacci bounces, preferably a break of structure at a Fibonacci level, hopefully to go long for the continuation of this uptrend. Or I want to see confirmation of the turn with a break of structure, telling me that it's time to start looking for shorts. Moving on to gold. Gold is definitely a fan favorite. Definitely not my favorite pair. I hardly ever trade gold, but a lot of people really love gold. We still have a couple possibilities with gold. Possibility number one is that this is an A, that this is an A of B. This is 3 ways for a B of B, and that we're now in a C of B. And then it's going to go up and take out all these highs and then turn back down for the bigger wave C. So an A, B, C of wave 4 based on the higher time frames. That's possibility number one, and it kind of looks like the most likely possibility to me, based on just gold, really looking at the pattern. Now, possibility number two, which is my original thoughts, were that this was already made it 3 waves up, and that this was going to make a lower high and continue down already in a wave C. But until we can identify the end of a trend for this move up right here, we have to realize that the market flow is up right now, and that the primary focus should be looking for longs, unless we get a nice break of structure down, telling us to start looking for shorts again. So going down to the 1 hour time frame. Now, I was kind of hoping and thinking yesterday that we probably would get another move down. I mean, it definitely played out as I thought. I was kind of thinking it wouldn't go up so much, but this is actually a good learning experience because I was saying yesterday that this move up was going to be a correction to this move down, so we put our Fibonacci retracement here. Now, I was saying that we need to see a break of structure at a Fibonacci level. We got a perfect Fibonacci bounce, and we got a nice impulsive move down. But what happened? No break of structure. Higher low, higher low. There was no entry to go short right there. So what I mean by a good learning lesson is that at the time, that right there would have looked like a nice short, but it never fit the criteria to enter short. We got the Fibonacci bounce. We did not get the break of structure. It made another higher low, and if you were following along with the trend, you probably would have gone long right there and probably had a pretty decent little trade yesterday. Now the same thing applies. If we get a bounce at a fib level and a break of structure, then we definitely want to go short. If we don't get that and it just keeps on pushing up, then the wave C of wave B scenario that I showed on the daily time frame is very likely to happen. So anyways, let's go back up and move on to the US dollar yen. The US dollar yen is another pair that I feel like is potentially very close to a turn. If we get a break of structure, then I definitely am going to be looking for shorts because that's probably the end of a wave B. And we are probably going to be starting a brand new downtrend for a wave C. Probably a wave 4 on like the weekly monthly time frame, so like an ABC of 4 on the monthly. But we don't have that breaker structure yet, and we had to realize the trend is our friend, and this could bounce from a fib level and go up much, much more. The trend is not over until the market says that the trend is over. If you pay close attention to your fib levels, your different time frames, and your structure, you can normally tell when a trend is over. So anyways, we got our Fibonacci retracement on this whole push up right here. Now I'm watching my fib levels closely. The 78% is the next one coming. If we get a nice bounce from that fib level or with a nice breaker structure, then it's probably going to continue the uptrend. If we get a bounce from that level with no breaker structure and another lower high, then you need to continue to look for shorts. If it goes down and breaks structure, then me as a swing trader, I'm definitely going to get on the short side, probably trading that big wave C of wave 4 to the downside on like the weekly and the monthly time frames, which is kind of what we're waiting for on all the yen pairs. I always kind of consider the dollar yen more of a yen pair than a dollar pair. If you compare the dollar yen to the other yen pairs, it's very, very similar. If you compare the dollar yen to the other dollar pairs, there's a lot of difference. Moving on to the euro yen. The euro yen to me looked like it was trying to end an ABC correction yesterday. I mean, it definitely made one, two, three ways down. Definitely a nice 50% fib bounce, nice engulfing move up. We're now going to have to see if this current move down is going to make a higher low and if this really is the end of a correction. It definitely looks like the end of a correction, so we're going to have to see if this move follows through or not by going down to the 1 hour time frame and putting our Fibonacci retracement on this move right here. We need to pay attention to fib levels as always. If we get a fib bounce, if we get a breaker structure, then you probably want to go long. If we get a fib bounce with no breaker structure, then you want to keep on looking for shorts. Definitely still. Uh, yeah, I mean, the trend is definitely up, so I still think there's a pretty good chance that this will make a higher low. And I would definitely be paying very close attention to these last couple Fibonacci levels. I would think that the most likely thing to happen is something like that, but if it just keeps on going down, never gives you a break of structure to the upside, then you'll never get a long opportunity, and you'll just continue to potentially look for shorts if you are a short time frame trader. So definitely keeping an eye out on this euro yen to see if it really does make a higher low or not. And the pound yen is actually has the same type of shape, but the pound made a very strong move down uh, at the beginning of the week and late last week. Most of this really strong move down is actually from the pound. Now we definitely do have a breaker structure on the pound, so we can definitely say that this move up is over. But this move down still could be an ABC correction to that move up. So we definitely had a 78% fib bounce. We had an engulfing move up. Same thing as the euro dollar, but now we need to see if this candle right here makes a higher low, and if it does, then it's probably going to go back up and finish off a wave B. So going down to the 1 hour time frame. So just like the euro yen, you should primarily be looking for shorts because we do have a breakdown. But we have our Fibonacci retracement out here because if we do get a fib bounce and we do get a break of structure like this, or potentially like this, then I would go long because this could be the end of an ABC down there. And if that is the end of an ABC, then this would likely continue back up like that. It even kind of looks like this could even be like an expanding correction. You could throw a couple lines on there and say that's like an expanding ABC. So I'm definitely keeping an eye out for a long. I'm going to be a little bit cautious because, especially on the pound yen, the momentum is down, the structure is down, and the trend is down on the higher roadmap time frames. But like I said, we could have the end of a wave C, and if we do, it potentially would be a really nice long opportunity. So anyways, like I always say, the rest of these pairs I do analyze every single day for my members in my live Zoom meetings, and I do a members forecast every single daily candle close. So at the end of every day, I do a members forecast which covers every single pair on this list. And I do share every single swing trade that I take with my members at the time of entry with stop losses. I don't really use take profits that often, but I definitely do give you my stop loss, and I do tell you when I get out of the trade manually. And if you're interested in that, then you do get all of that, including my trading course for only $30 per month at my website, fxpipcollector.com. If not, definitely check out my free Discord community. It's 100% free to join. I am trying to build a community of traders that are willing to help each other out. So if that's you, then definitely join. The link for that is at the end of this video and in the description of the video. So anyways, as always, and thank you for watching and happy trading.